May profits be upon you. How you doing? Glad to see you. All right, let's take a look at the Euro USD. Let's look at the Euro USD. Let's first look at the RT money meter. Last week, the US dollar was ranked at number one at 521. This week, it's ranked at 247. It's trending in the wrong direction. It's trending down. But why? Why? Because it's in a pullback. It's in a retracement. That's all. That's all. It's very strong. It's still ranked number two, one of the strongest of the currencies, and I still say the strongest. All right, and you'll see why in a minute. Now let's take a look at the euro. The euro is ranked last week at minus 557. This week is ranked number six again, but the change, the rate of change, the percentage points is minus 282. It is actually trending up. Now, do we want to put a strong against the weak? Of course we do, but do we want to put a strong that is trending down and a weak that is trending up, or do we want to put those two together? Not necessarily, but in this case, I think it's best to do so. Let's look at the monthly. All right, I want you to see that every candle on this chart is representing a month, and we've been trending down for months. All right, this is a very bearish market. Okay, and once we break this significant low from 2017, you know we are very bearish. Now, what are we reacting to? What are we reacting to? A monthly demand zone found here. All right, and this is how it looks from the macro view. All right, and we expected a reaction from this zone. Doesn't mean that it's going to reverse and take out these ties and whatnot, but we expected some kind of reaction here. All right, now let's go to the weekly. Hello, there you go. All right, we're going to the weekly now, and pretty much the same story. We see the dissension of price, right? And we can see that along the way, let me use this, we can see along the way that we are taking out lows along the way, just taking them out and preserving the highs. We don't come back and get those highs. We just take out lows. So we're making lower lows and lower highs. This is the definition of a downtrend, all right? And you can see that that's pretty strong. All right, if we go to the daily, what do we see? All right, this is where things start to clear up a little bit. I want you to make note that as price is descending from up high down to this low, a lower high is made, a retracement. All right, during this time, you can see that the euro is gaining strength against the dollar as the dollar weakens in a retracement. This is the inverse of the US dollar index, the Euro USD. And while Euro is getting stronger, the dollar is going the opposite way. Now that tide turns again as we make an internal low here, an internal low here, and an internal high here. We break this structural low, and we are again resuming the overall bearish trend. All right, lower low, lower high, lower low. All right, what are we doing now? We're expecting a lower high to be formed in accordance with the higher time frame lower trend, right? Where will we be expecting that? Remember, the top of the lower high and the bottom of the lower low. This is the top and bottom of our trading range. We are above the 50th percentile of this trading range, right? And we are in premium price as opposed to discount price. And here we are. This is where I would be expecting to take a lower high, for the price to make a lower high. Could we come up a little deeper into that this zone of supply? Of course we could. All right, it would just make, but this is correction to this impulse. All right, and as we finish correcting, I'm looking for price to start to roll over because I'm looking for that lower high to be made. That's the way you correlate higher time frames to lower time frames. The lower time frames work within the framework of the higher time frames. And if you see an uptrend like we're about to see on the 4 hour, All right. Let me use this. Come on. All right. You can see we broke structure here. All right. And we are bullish here. Once we break that, we are bullish on the 4-hour time frame. And then we go to this period of consolidation. All right. And this is messy PA. This is messy price action, but we did make a high here. All right. We did make another low here. All right. We respected this low, which is a strong low because it made a new high. All right. This is a weak high because it didn't take out that strong low, right? So we expect it to be liquidated, and it was. Boom. Okay. So we have a higher high, higher low situation with the 4-hour time frame. All right. We are bullish, but we have to ask ourselves, why is it bullish? Because it's facilitating that lower high to be made on the higher time frame. Got it? That's the way it works. All right. The higher time frame sets the framework with which the lower time frame works. All right. And if there's an expected higher time frame, lower time frame, a high time frame, lower high to be made, you expect that 4-hour time frame to turn bullish until this higher time frame objective is fulfilled. And then you're going to expect the resumption of the higher time frame downtrend. Got it? After that low high is made, what are we expecting? A lower low. That's the brief and the brief lesson for the day. All right, so let's take a deeper look in here. All right, price is now turned bearish. Why is it bearish? All right, look at that 4-hour made that higher high. All right, breaking this structure here, make that higher high. We pull back. We pull back, a significant pullback on the 4-hour, which represents to me like the possibility of this being a higher low. We failed to make a higher high. We are reacting to the daily zone of supply. All right. And we break that low. We break this internal low with an IBOS, an internal break of structure to the downside. Price comes back up to the breakout point to retest it. And I believe we should be seeing some more bearish price action in this market. All right. We have a nice little trend line going up. And I don't use trend lines to trade off of, but I use them for illustrative purposes. Okay. And what you want to see here, what do you want to see? I want to see the failure of supply or the failure of demand before I start taking my shorts or longs, right? I already have a bias in my mind. The higher time frame bias is bearish. All right. The 4-hour is bullish, but it has already signified that it is turning bearish with this significant break of structure here. All right. This is an internal break of a low. All right. Internal structure. All right. But and this, if once price breaks this low here, this would confirm that we have turned bearish for sure. If you are a conservative trader, especially a swing trader, you want to wait until you see the failure of 4-hour structure, and then wait till price comes back up to test that that supply that is responsible for the break of this demand zone. You want to take that short from here. That's a conservative way to look at this price action. All right. And if you're taking longs, you need to see the failure of supply. You need to see the failure of supply. And from my point of view, I want to see these highs taken out with a break and a close. I want to see the highs breaking out, taken out with a break and a close above before I consider longs in this market. I'm not considering longs. I'm looking for, I don't want to take longs into 4-hour nested within a daily supply zone. I wouldn't recommend it. All right. I would need to see some significant breaks before I would do that. And I start seeing a body break above these highs into this. I would wait until price comes back and to the demand that is left behind that is responsible for breaking these highs. I'll wait for price to come back, and then I would consider taking longs from there. Right now, I don't recommend longs. I recommend shorts. So here is a zone of supply. That is a selling zone. Okay, not the strongest of all selling zones. I will grant you that, but it is a selling zone. Why are you showing demand? All right. If price makes it back up here, I'm expecting price to fall from here. Okay. Can I get something to write with? I'm expecting price to round over. And as soon as price hits here, I'm going to the 15-minute for a confirmation before I enter a sell trade. All right. If price comes down to here, I want to see this zone taken out. Boom, boom, boom. And when it comes back up, I'm looking at the demand zone for a high probability trade to the downside. That is my conservative, safe entry. All right. A more aggressive entry would be take it from up here. Make sure you go to the 15-minute and get your entry from there. Okay. But if it comes down, if the market comes down, I'd wait until we take out this this demand. And when it comes back up, take your trade from the supply that is responsible for taking that demand zone out. I hope that you get what I'm going, get where I'm going there. I hope you're picking up what I'm putting down. All right, if you like what you saw, hey, tap the like button if you like what you saw. If you enjoyed the video, I want you to understand. I want to target all of this sell side liquidity. I want to target that this week. All right, this week and next week. I want to target that. So, look out for the news. Look out for the news. We have significant news coming up in this market. Okay. Wednesday, you have retail sales for the US dollar. All right, and you have unemployment change for the euro. All right, but it is where is it at? Don't go on it. Thursday. No, it was Wednesday. Wasn't it FOMC? There it is. FOMC. There it is. All right. Be careful. FOMC. And we have CPI data on Thursday for the euro. Okay. Just be careful that you want to just be aware and be clear of taking new entries around that time. Okay. I'll see you in the next video. Like, subscribe, and leave a comment. All right. I love to talk to my my viewers. I'll talk to you in the next video.